Good afternoon, ladies and gentlemen. I am going to go over the entire market, the futures, the indices, US stock market, cryptos, forex. Going to do a overall market review on the entire market, on what's going to happen in the next month, next few months, and the anticipations we are going to have and how this market is going to play out. We've had these anticipations for a while, and it's playing out as it should. Market is always doing what we want it to do, and let's dive right into it. So, this week, and I'm going to go over the US NAS 100 or NQ1, whichever one you want to call it. I'm going to start off with the US market first, and then I will go into the cryptos, and then I will go into the Forex market for Euro, and I might do a GBP USD at the end. But let's dive into the US stock market, which is my favorite, which is my bread and butter. And I will show you and I will tell you what's exactly going to happen. So this week we opened up, price pushed up. As you could see on this weekly wick, price pushed up. It cleaned this weekly volume imbalance, which there's a daily volume imbalance as well. We've drove into 50% or about, I want to say 30 to 25% of this weekly candle. We've taken out a lot of buy side. We've taken out a lot of orders. Market has also tricked a lot of people into thinking this is a good time to buy, and the lows have been made, and retail is getting tricked, and they're all about to get wrecked. Drop down to a daily time frame. So as you can see, we've pushed up this week, past 2 days, grabbing retail orders, taking out stops, getting people to go into longs. And today we have this bearish candle. And this is the daily volume imbalance that we've cleaned. So price is very healthy the way it's moving. And it's moving exactly the way we want it to move. So when this week opened up, we've created this gap, which is the new week opening gap that was left open, which is something I love to see because, quote unquote, the market makers and the people that create this algorithm and whoever is controlling NASDAQ is very smart and they know exactly how to set it up. So smart money makes money and retail loses, and people are not going to see this coming. People do not see this coming. And I will tell you exactly what's going to happen. So we have new week opening gap. Monday we pushed up, cleaned the weekly and daily volume imbalance. Tuesday we pushed up and we've took out buy side from March 7th. And the reason we needed to have this last push up on Tuesday because a lot of retail was shorting the high on Monday. So we had to have Tuesday push up, take out that last buy side, drive into 25 to 30% of the previous weekly candle, previous as in the weekly candle from 3 weeks ago, which is very healthy. And a lot of stops have been taken. Also, a lot of people going long the last 2 days. A lot of long orders down here that retail thinks they're safe. Long-term investors think they're safe. People with big money think their investments are safe. Now, looking at the daily time frame, the daily high on Wednesday has been made. So the market should not return back to Wednesday's high. And if you zoom in, you could see that we've taken out Tuesday's high. So we've taken out all the stops, we've taken out all the orders from Tuesday high, which is very healthy. So as you can see, this daily candle took out this previous daily candle. And we've had a market structure flip, and boom, right back down to new week opening gap. Now it hasn't fully cleaned new week opening gap, and you have a lot of retail longing the low, thinking they're going to be safe on the week and the new month incoming. So looking at the daily time frame, and we're gonna have this close in about an hour now, but this candle is obviously going to close bearish. And on the daily time frame, if we have one more bearish day, price will attack all these lows where my cursor is going, all of them. March 21st, March 18th, March 14th, March 13th, March 11th. It's going to clean all these guys out. Now, as long as price stays below my red box that I have here, which is the new week opening gap drawn on the 1 minute time frame, which aligns with the daily gap, as long as we stay below this box, price is going to attack, boom, right where my cursor is at the weekly fair value gap. So going back to the weekly time frame, the weekly fair value gap from August 12th. So back to the daily, it will attack that, which will take out majority of the sell side we would want to see. And if we start getting closes below and price action starts trading below where my cursor is, which is the weekly fair value gap high, price will attack the lowest lows of March, which would be March 13th and March 11th. Now going back to the weekly time frame, this week is going to flip into the new month, so it's going to be very interesting how it will flip into the new month. So we know the highs have been made, so this weekly wick has been made, and on the new month, when the new monthly candle opens up and the new week opens up, it could make a small upper wick depending on how this week closes. So if this week closes below new week opening gap, next week we'll just make a small little wick on the upside, and then bam, right down to take out March 10th low, which would be below that weekly fair value gap I'm talking about. And if when price drives into this August 12th bullish fair value gap, I would want to see it inversion. And if it fails the 50%, which would be right where my cursor is, almost at 19,000 flat, it's going to instantly drop to the low. And once it fails this low, it's going to get really heavy and attack August 5th low and April 22nd low. And on the monthly time frame, you would have this monthly candle drop off a little bit more depending on how they want to trade it the next 2 days. And the next month will open up, small upper wick to a point of interest on the weekly time frame or the daily time frame. So the new month should open up somewhere in the weekly fair value gap, and we will drop off on the monthly and make another bearish monthly candle to attack the September 2nd low, and the August 1st monthly low. So dropping back to a daily time frame, back to this new week opening gap. So anything that trades below and price stays under the new week opening gap of this week, it will attack these sell side levels where my cursor is. And if we stay below the weekly fair value gap, we will attack more sell side levels. Drops to the 50% and fails, it will attack the low. Low fails, it will attack those further sell side levels that I mentioned on the higher time frames. Now we have a bearish fair value gap in here right below new week opening gap. So once it fails new week opening gap, it will attack this bearish fair value gap. Bearish fair value gap fails, boom, drops down to the weekly high. Once it's at the weekly high, it's full-blown acceleration to the downside. So everything that I'm mentioning on the monthly, weekly, and daily is all going to play out in the same way. 4-hour time frame. As you could see, we have not gotten into the weekly new week opening gap, and we haven't fully cleaned the new week opening gap because today, this is the high of Wednesday that I don't want to see a return into, has done a lot of damage around 6 a.m. So price is steamed out here. We're going to need a new day. We're going to need a couple new days. We're going to need a new week that's going to overlap into the new month. And all these lows are going to get taken out. And these are the lows that I've mentioned on the daily and the weekly. One-hour time frame. A lot of retail longing this low. And if you zoom in, you see they've taken out that low just a little bit. That's why you have price pushing up, because too many people are shorting it down here. There's a lot of short orders going around in here. That's why I'm saying we're going to need a new day, and it's going to need a new month. Now I want to look at NQ1. NQ1 has, again, same anticipation, has not fully cleaned the new week opening gap, and that's what I want to see. Now, if NQ1 on regular trading hours, let's drop to a weekly time frame. I'm looking at the September 16th bearish fair value gap. If we drive into this bearish fair value gap on the new week, which is in 2 days and 1 hour, and we drive into the March 17th body and fail the 50% of this body, which lands at the 50% of the September 16th, 2024 weekly bullish fair value gap and fails, we're going to snap down and take out March 10th weekly low. And once it gets there and the weekly low lands at 50% of the August 12th weekly fair value gap, which is the same thing that I was looking at on US NAS 100. So NQ is the futures chart, which is the same thing, but price points may be a little different, but all the anticipations are the same. As you can see, NQ on the weekly, the expansion was a little larger to take out more stops, but the anticipation is the same. And once it gets down to this weekly low, which will land at the 50% of the August 12 weekly time frame fair value gap, it will fail and boom, snap down to the low. And once it fails this low, it'll snap down, take out September 9th, September 3rd, and August 5th sell side, which is the lows of these weekly candles. Now back to NAS 100 on the daily time frame. So next day I can anticipate small little wick up and bam, right into this March 10th Monday bearish fair value gap, but I need to see it trade below new week opening gap tomorrow so I can have that anticipation. And once it fails March 10th weekly fair value gap, the box I have in here, it's instantly going to attack the high. And from here, I get one daily candle bearish close. It's going to clean the entire range. So all these anticipations are the same. All these levels that I'm saying are the same. And my anticipation in the market is that the highs have been made today on Wednesday. And we should see heaviness next few days, next few weeks, and going into the new month. Because none of these guys down here are safe. A lot of retail longing these lows. US 30 dropped down to a weekly time frame. As you could see, US 30 has pushed up, same exact thing, has cleaned the weekly volume imbalance. There's also a daily volume imbalance. It's taken out all the stops. Didn't give retail any opportunity to short any equal highs because the books teach you support and resistance that does not exist. So price pushed up, cleaned this gap, which is the weekly volume imbalance, daily time frame. You have a volume imbalance in here, so that's what got cleaned. Notice how this week's wick and also this day's wick on Wednesday, exactly where my cursor is, does not land somewhere that's equal in the market. Because the market likes jagged. It does not like straight. It does not like equal points. It likes to trick the retail mind. It likes to trick investors that think, and traders and big people in the market that think support and resistance. And if two lines meet in the chart and trend lines and indicators, it does not like to give them an opportunity, and it doesn't want to make it easy for them. But for someone like me that sees it this way, it's very, very simple. And it's very easy to capitalize on the market. And if you're new here, it's very difficult for you to understand these concepts because everywhere in online, social media, and all the social media platforms and any website you go to or trader out there, they teach you bullshit. They don't understand how the market really moves. And it's very, very rare to find somebody that knows how this stuff works. So as you could see, this daily candle, there's nothing that aligns with this wick. Notice on Monday high, just like how NASDAQ was, that's an equal high. These 2 points align. They're not going to let people capitalize on a short on this day. This day pushes up on Tuesday, but this hasn't cleaned the weekly volume imbalance in full. So we needed a Wednesday to push up, take out all these orders, take out all retail, and then boom, flip the market right down. Obviously, we have a model up here on that lower time frame that sets up algorithmically to come down to these levels, but I don't want to get into that. I just want to show you a higher time frame move. US 30 has a new week opening gap, just like NASDAQ, that has not reached there yet, which it will reach there. It's about 400 handles away. So in the next couple days and new week and going into the new month, you will see it attack this new week opening gap that also retail sees as a gap up. So market needs to go up, and that's not how the market works. So we will have price trade into this new week opening gap, and same as US 30. Same as NASDAQ, because the Dow follows NAS, and I will go through ES after, to S&P 500 that follows US 30 and NASDAQ. Dow will attack the new week opening gap, which is this gap where I'm hovering my cursor over. And once it fails this new week opening gap, it's taking out all this sell side. March 21st sell side, March 17th sell side, March 13th sell side, same exact sell side levels as NASDAQ. And once it drives into this new week opening gap and drives into the March 10th daily time frame bearish fair value gap and fails, it's going to attack all those levels. And the highs have been made on the Dow as well. Back to the weekly time frame. This weekly time frame on Dow will either flip and close bearish, and next week will open up, make a small upper wick, and boom, right back down to March 10th low and March 17th low, which is all those sell side levels that I mentioned on the daily time frame. But what's going to give us the sweet spot is this fair value gap at March 16th. When we drive into this fair value gap at March 16th, which is the March 17th weekly body, which is landing almost at the 50%, and that fails, it's attacking all the sell side levels that I mentioned, which is over 2,000 handles away. And if once we fail those levels and get into the August 12th, 2024 weekly fair value gap, and same thing as NASDAQ. So same thing as NASDAQ, once it gets into these levels and hits the 50%, a lot of retail is going to be longing that low. Now, that's going to be a lot of time until it gets there. It could be very quick, but it's going to take a few days. It's going to take a few weeks, depending on how volatile this market wants to get. As of now, I know it's going to get to these levels. Once it gets to these levels, retail is going to be longing the low. From September 9th, retail will long the low. That low will fail. It will drop down to the weekly time frame, weekly fair value gap low from August 12th, where this box is. And it will drop down to take out those further sell side levels from August 5th and all these sell side levels down here, exactly as NASDAQ. And as you could see here on the weekly time frame, this is a shift in market structure, pulls up, retests. It should be around 50% of this leg. Bam. Tick for tick, right at 50%. 50% lands at November 4th, 2024, bullish FVG that I want to see inversioned. 50% lands at the volume imbalance, and 50% lands at the Wednesday high. and 4-hour time frame, just dropping down to a smaller time frame so I have a better sight. This is the new week opening gap that I want to see trade into. And once this new week opening gap fails, it will attack this clean equal low right over here, or exactly where my cursor is. The March 18th low and the March 21st low, these two lows, median targets, which a lot of people are comfortable with because it's quote unquote support. And this is setting up the market maker model. And just like how I showed you on the weekly time frame, back to the weekly, shift in market structure, pulls up, retests, and we're going to start dumping off and be very bearish. That's the same thing that I'm looking at on the 4-hour time frame in this weekly range. This is our weekly range. Shift in market structure, pulls up, and the next couple days and weeks and month should start dropping off to attack new week opening gap. So this is the shift in market structure model. Dow in this range has buy side taken, shift in market structure, retest, drop off. ES, let's remove some of these fair value gap boxes. ES weekly time frame, same exact scenario as what I just explained on NASDAQ, what I've just explained on the Dow, and it's the same narrative as S&P 500 or ES1, if you want to, whichever one you want to call it. This week has pushed up, cleaned the weekly volume imbalance. It's pushed up, grabbed a lot of orders, took out a lot of retail, made a lot of people think this market is going to go long. And once this week and price action in the next few days and weeks starts trading in this September starts trading in the September 16th weekly FVG, bullish weekly FVG, just like how I mentioned on the other assets, and hits the 50%, and the 50% lands at the March 17th weekly time frame body and fails and uses it as an inversion, it's going to attack the lows. Same sell side levels as NASDAQ. They're all going to correlate the same exact way. So if I get that weekly bearish closer, next couple weeks I get bearish closes in here, it's going to attack all the sell side levels from March 10th, March 17th, and it will attack the August 12th weekly fair value gap, just like how I mentioned on the other assets. And it's going to get very heavy in here. It's going to be a lot of fun for us, not for long-term investors, not for people that are blindly buying the market and don't know what the hell is going on. So it will push into this weekly FVG. And once it does that, we are going to be in the move. So we are going to be participating in it until it gets down there. We're already going to be stop loss BE. We're already going to take 50% out. We're going to have the runners left. And all we're going to need to do is sit on our asses, and it's just going to make us money. So it doesn't need to fully play out for me to make money. It can even play out halfway through, and I'm going to be so deep in profits that it's not going to matter anymore. And same as the other assets, as in NASDAQ and the Dow, just a little different because they like setting it up different. As in, the price action will get to the same places, but they'll set it up a little on their own way. So as you can see on the weekly, pushed up. Notice when you zoom into the highest high of the market, what has it done? It's taken out every single person that was longing. Everybody. This is the highest point in the market. Look where it is, hanging by the cliff. Took out everybody. So buy side taken, shift in market structure, retest the 50% of the entire weekly range, and this weekly leg, boom. Notice how this weekly time frame taps the 50%, tick for tick. That's why I don't want to see it get above there anymore. And the next few days and weeks, we should start dropping off and using all the point of interests that I mentioned to attack all those sell side levels at the lows. Daily time frame, you got new week opening gap that it hasn't reached yet on S&P and ES. So once it reaches there and starts trading below that weekly new week opening gap. So once it trades below, once it reaches and trades below new week opening gap, it'll attack all the sell side levels like this one that I see right here, clean equal lows. And that's a huge move down. And we're going to participate in it. And if you're in it, you're going to make a lot of money. And you're going to have your runner position in for the next month and months incoming. So that is my overall anticipation on the US stock market. I'll take a look at Tesla, people's favorite weekly time frame. It wants to attack these equal lows down at 216. So same exact narrative. I want to see the November 4th weekly fair value gap used as an inversion. I currently have the monthly time frame bullish fair value gap marked. So as long as price could stay below, I want to say around 274 flat and 266, Tesla's going to drop to 216 and take out all these sell side levels, which will align with NAS going to the sell side levels, Dow going to the sell side levels, ES going to the sell side levels. So all of them are going to correlate, and it's going to be fun. And once Tesla drops into the March 17th weekly candle, we're going to be playing off the October 21st, 2024 weekly FVG. And if this gets used as an inversion, boom, snapping to 179.54, let's say 180. And that's going to make the market really heavy. That's most of the targets will already be hit by then and will be in the play, and we'll be deep in profits, and nothing will matter but what we're seeing on the screen. Bitcoin. So if Bitcoin is going to drop off, I don't want to see it trade above 95,000. I want to see it close below this monthly fair value gap. And used as an inversion from November 1st, 2024. Bitcoin is going to need a little bit of more time, but once the indices start showing heaviness, BTC will fall as well, drop to a weekly time frame. I would want to see this weekly candle start to flip bearish. It's currently using the November 11, 2024 weekly bullish fair value gap. So highs are being created on Bitcoin. I don't want to see it trade above that 92,700 level. And once this snaps down to the 50%, which is the body low of March 17, 2025, this will fail and it will just keep dumping off and be very bearish. And it will attack November 4th, 2024, bullish FVG. And once it gets down here, it's going to get heavy. It's going to get heavy and it's going to attack all these sell side levels where my cursor is hovering. So from the 65,000 level all the way to the 50K level. And the model you're seeing in here is buy side taken, takes out all the orders in here, gets everybody to long up here at 100K plus, shift in market structure, retest 50% of the range, and this will start trickling down to those sell side levels. Daily time frame, it needs time. This asset is a little bit slower. This is not Bitcoin like in 2020, 2021, 2022. It's slower, but on the daily time frame, I want to see it drive into March 9th, 2025 daily FVG. And I want to see the Sunday, March 23rd, 2025 daily fair value gap, bullish fair value gap. Once it drives into this and fails, and I get a bearish close, and these are just, I'm talking on the higher time frame. Obviously on the lower time frame, we're going to get the models that's set up. But once we drive into this and fail, boom, it's snapping down to this low. Once it fails this weekly time frame low, it'll snap down to the monthly time frame low. Litecoin on the monthly time frame, I would want to see. So I'm looking at LTC USD, Litecoin to US dollar. I would want to see the March 3rd. I would want to see the March 3rd, 2025 weekly fair value gap hold and stay unfilled. So if the March 5th weekly fair value gap stays unfilled, as in price doesn't want to get above there, this asset will be very, very heavy on the short side. Now they could drive it up, take it to that weekly FVG where my cursor is right now, and then start dropping it off. But if it's very heavy, if it's really, really heavy and really bearish, they shouldn't get above to the weekly fair value gap. So I would want to see that stay unfilled, and it will attack the purple box down there where I have the bullish weekly FVG mark, the purple box where we reacted from recently with that large weekly wick. And once it gets there, that's not a point of interest that's big enough to drive this asset up. So it will fail that. It will fail that and attack $60 and $50, and it will attack the sell side levels with Bitcoin going down as well. So it will drop down, attack these sell side levels at 78, 81, and it will fail and attack all these sell side levels down here. All these people that were buying in 2024, late 2024, are going to get attacked. Daily time frame. The reason I want to see the weekly fair value gap not get touched and it's a breakaway gap, because it's already done the damage here with these daily candles. Daily pushed up, closed below, closed below, closed below. So it's done all the damage it needs to do here. There's no reason they should push it up to that. Weekly fair value gap. And there is a daily point of interest here, which is very small, but I want to see price trade in here and close below, and it will attack all these sell side levels at the $86 to $85 mark. Same narrative as NAS. This asset definitely does not move like NAS, but if this is all going to play out, they'll all play out together, and this will be much slower. XRP, actually right back down to LTC on the monthly. The only thing that's holding price as quote unquote support is this monthly fair value gap from November 1st. So once we drive in to that $80 level that I was talking about, $85 level, and if it does not want to show me willingness to go up in here, which I don't see happening, it's going to snap down on the new month, take these levels out, that $60 to $50 level, and it's going to get very, very heavy for people, and it's going to take these lows out down here. XRP weekly time frame. So you have buy side taken. This leg on March 3rd is the shift in market structure. This is price pulling up to the 50%, and it's using January 13th, 2025 as an inversion. And you should see this weekly candle in the next couple weeks just snap down. And once it snaps down to November 21st fair value gap, once this snaps down and fails, which it will, because once it gets down here, it's going to fail. And that's a large enough a move to capitalize on. But once it gets down here and it fails the 50%, which is where the March 10th weekly wick is landing, it'll drop down to the low, fails the low. So this dailies are going to expand down. And once it fails the 50% where my cursor is, it's going to snap down to the low. And once it's at this low, it's going to fail, and it's just going to keep dropping off, which there is a monthly time frame fair value gap in here. And it's the new month will drive into the huge monthly FVG. And it'll be very interesting if they would want to fail this monthly fair value gap just to kill this asset and attack all these lows down here. Be very interesting how they're going to play this out. But I already see The high has been made on March 2nd. I see a premature high has been made today. I mean, not today, premature high on Wednesday, March 9th. And if this range starts to hold, so if this red box that I have, which is the March 7th weekly FVG, starts to hold, this is also 50% of the weekly leg from high to the low. So if this 50% starts to hold on the daily, if this range here starts to hold and I get bearish closes, it's attacking all those sell side levels that I mentioned. Now, dollar index. Dollar index has dropped off, tapped August 1st fair value gap. It's tapped a yearly FVG low. Now back to the monthly. So it's taken out a lot of sell side. So if the dollar index, and it's already pushing up, pushes up. Let's take some boxes out here. So if this dollar index, and remember there's a yearly point of interest here. I'm going to remove that. So if dollar index starts to push up, an inversion, March 3rd, weekly bearish fair value gap. So uses the 50% and closes above and inversions it, pushes up, starts trading above 106.3, 106.14, and it wants to attack these highs, it's going to get very, very heavy in the market. And that's the full correlation. Full correlation on the entire market. So very important to watch how dollar index is going to trade. Euro USD. Weekly time frame. They're already dropping it off this weekly point of interest, like how I mentioned earlier on in this week and last week. They're going to drop it off. And depending on how they trade at the 50%, which is around 1.06673. So once it drives down to the 50%, depending on how they trade at the 50%, but if dollar index is going up and NAS is going down, euro is going to go down as well. So once it trades here and fails, we're attacking all these sell side levels down here. So this weekly FVG is very important for the euro dollar. And depending on, this is going to need a new month for its move, which this fair value gap does land at the 50%. So once it drives, and it's already inside it, but I need a deeper drive down, tell me how they want to trade this asset. The only way I flip my bias is if we start trading above the weekly FVG and start trading above this week's high is the only way I flip my bias. And that's all the assets. So the only way I flip my bias if we trade above Wednesday's high. And I'll start looking for longs in the market, which would mean price would need to push all the way up. And I'm looking at NASDAQ now, which would mean price would need to trade all the way up to today's 6 a.m. 1 hour fair value gap. And there's a 4-hour FVG that got formed. So unless if I don't get an inversion from today's 4-hour FVG, and it would need to push up all the way to the 1-hour fair value gap at 6 a.m. and inversion it to go to the upside, I'm not interested in longs. And I would want to see this as a 1-hour breakaway fair value gap. It shouldn't push up to this 6 a.m. FVG. And that's for all the assets. So I don't want to see it trade above Wednesday high. If it does trade above Wednesday high, I will start to look for a long bias, but I'm not worried about that at all. So the only way I flip my bias is if we trade above Wednesday's high and use this daily volume imbalance. So if we use the daily volume imbalance as support and we get a bullish close above the daily volume imbalance, my entire bias will flip. As of now, I am full-blown short on this market, and it's going to attack all the sell side levels that I mentioned. People don't see it coming. People aren't going to see it coming. You're going to be here live every day. We're going to see it happening tick for tick. We're going to see it unfold, and it's going to be very fun. We're going to make a lot of money. And I'm excited. I'm excited for next few weeks. I'm excited for the new month. And if you get one of these positions in, it's worth it to take it on a live account, or you can participate on intraday plays only. But the way I like to play it is I take one of these positions on a live account. Like I do have live trades from today on my live account at the highs. That's potentially going to be the runners going into the new month. And that is how you capitalize on these moves. And on that note, that is my review on the entire market. That's what I want to see happen. That's what I'm very confident, and that's what's going to happen. Bitcoin as well. The only way I flip my bias to going long is if we trade above 92,700. The only way I flip my bias to go long on Litecoin is if we start trading above 120 and we inversion March 3rd. So if we get into the weekly fair value gap from March 3rd, which will land at the daily FVG on March 3rd. And if I get a bullish candle close, I know it will attack the highs, but I'm not worried about that. That's going to take time for it to set up. So I'm not worried about that. And that is my anticipation on the market in the next month or so. And depending on how it plays out, we will capitalize on it and see them attack all those sell side levels. But on that note, have a beautiful day. Have a blessed day. And I will keep you guys updated once it gets to those sell side levels.